I think that the president made it clear yesterday when he said he didn't want to cause a big shock to the oil market and send gasoline prices up. And that's part of the reason that we've now seen this kind of compromise with the main importers of Iranian oil to give them exemptions that allow them to continue to import some of their oil. And you can see that reflected in the oil price, which is down from, what was it, around $86 a month ago now, down to into the low 70s.
So, Dan, let's talk about that. Washington, so there's a 180-day exemption right now, right, half a year. You got this is an exemption for 8 importers: China, India, South Korea, Japan, Italy, Greece, Taiwan, and Turkey. These are all of the biggest buyers from Iran. What do you think could happen in the next 180 days?
Well, I think the pressure will continue on them to reduce their supplies. When I was in India about 2 weeks ago, the Indians said very bluntly, we're not going to zero. I think the administration is going to push them to do that or to try and get them lower. Right now, it still looks like Iran will be exporting about 1.2 million barrels a day, whereas doing 2.6. And they put a lot of oil into storage on tankers. But I think this is going to be kind of more of a slow motion rather than a cold turkey, because a couple of weeks ago, which was really agitating the market, they were saying we want zero exports from Iran, and that simply was not feasible.
And will that be feasible after 180 days? So 180 days out from now, if you had to predict where WTI crude will be and where these countries will be vis-a-vis Iran, what's going to happen? Well,
I think we'll see some further reductions in imports from those countries. I think it's still hard to see getting down to zero, but that's, this is part of a larger program in terms of banks and all the other sanctions, really trying to put this pressure on Iran. What's different about it this time, it was unified countries working on the nuclear program. Now it's really the power of the dollar and the U.S. government pushing this. I think a big question, Andrew, is what is the objective here? Is it changes in terms of what Iran does, that is on its missile program, its activity in the region, or is it regime change? And I think that kind of ambiguity is going to kind of be the foundation.
And if you had to handicap it, Dan, what's your answer to that question?
Well, I think that it's not going to be, I think regime changes are going to happen. I think we're looking next year, expecting Iran to lose about 2.5% in terms of GDP. I think the pressure will be there. The difficulty is, Andrew, with North Korea, there was one guy to talk to. In Iran, there are a lot of guys to talk to. It's a much more complicated situation. It's a country with a bigger population than Germany. It's got a very rancorous political system. So the question is, who do you actually sit down and make a deal with? That's what we're going to have to see if something unfolds over these next 180 days and beyond that. The other thing is that in 180 days and after that, you start to see the bottlenecks in the Permian, which are restricting the growth of U.S. production, which is still growing fast. You see the infrastructure constraints being lifted and more U.S. oil coming into the market. And that probably is something that would then strengthen the administration's hand.